Hello traders, this is Anthony. Welcome back to our video today. So in today's video, I want to look at a very crucial part in trading or when you are marking your stretches in your charts. So basically, you know very well that we normally use SMC concepts. And today, what I want us to talk about today is how to identify a valid pullback, or in other words, how to identify basically a valid correction. So maybe you are new to trading, you don't know what I mean when I'm talking about a pullback or a correction. So basically, when the market is moving, it moves in two ways, whereby we normally have the impulse move, then we do have the correction move. After correction, then we have the impulse move, then correction again, then we have an impulse move. This is for the sake of when the market is moving in an uptrend. So when you have a downtrend or when the market is moving to the downside, then it is the opposite of what we are having here. So this move after the impulse move, this move to the downside, this is what we are calling the pullback. Then you have the impulse move, then you have the correction or the pullback, then the impulse move. So if, for example, we are trending to the downside, so this is what we are having. This is our impulse move. Then you have the correction. Then you have the impulse move. Then you have the correction again, like that. Then you have the impulse move. So these are two ways on how the market moves. Now, I want us to identify that in a chart. So here we are on the 1 hour time frame in the Euro USD chart. So for me, I normally have two rules that I normally use when I'm identifying a valid pullback. So first of all, the main rule that I must see for me to say this pullback is uh it's valid. So I have to see three consecutive candles that are closing to each other. So what do I mean by that? If this one is a bullish candle, let me mark. If this is a bullish candle, I have to see me along this. I have to see another bullish candle closing above the previous candle, and I also need to see another bullish candle closing above the previous one. So this is what I mean when I say three consecutive candles that are closing above each other. And still, when we are talking about closing above each other, it must close above the previous wick like this. If this is my wick, so the body of this candle should close above the previous candle wick like this. So let us see that one on the chart now. So for instance, you can see here in this 1 hour chart, you can see here the market was trending to the downside. You can see here the market is in a downtrend. So this is the last. Now I want us to know to check where did we get our last bullish break of structure. So if I look here very well, you can see that. Now for this time frame, over in this 1 hour time frame, this is not a valid pullback. You see this? So what have I said? So the first and the main rule that we have said is that I must see three consecutive candles that are closing below or above each other. Depends with which trend are we in. So for example here, we are really a bearish trend. So we expect to see three consecutive candles that are closing below each other. And when I say three candles, remember I've not said three bullish candles or three bearish candles. No, provided that those candles of mine, doesn't matter whether it's bullish or bearish, provided I have three consecutive candles that are closing above each other, then now that is a valid pullback for me. So you can see here very clearly that we are in an uptrend. So did we get here break of structure? Here we have break of structure here. So if I look from this area here, this is the last bullish candle that was printed before the pullback. Now, if I try to check here, I have three consecutive candles that are closing below each other. The first candle was this one. Let me try to zoom for you to see clearly. So this was the first candle here. So first of all, let me mark this one as remember I don't mark this break of structure before I confirm whether this is a valid pullback. So here it is. Now the first candle that was printed after this bullish candle, you can see it is this candle. Did the second candle close below the wick of the first candle? No. So now this one, I will not count this one as the second candle, but I will count this candle here, the third one, as the second candle. I hope someone is getting something here. This one, I will not count this one as the second candle. Why? Because it did not close below this first candle. So these two I'll count as one candle. Then this one is the second candle because it has closed below this and also below this candle. Then did we get the third candle? No, this is not the third candle. So this alone is not a valid pullback. You can see market try to push up, but it rejected above this support here. You can see here we have some kind of support. So market faced some rejection, then it came back. After coming back, remember this is our second candle now here. You can see this now becomes our third candle because it has closed below this candle. Now that one qualifies this one to be a valid pullback. I hope you are getting something. So that one qualifies this one to be a valid pullback. So sometimes I do give exception. For example, if we have a very big candles that are pushing to the downside. For example, like in this case here, you can see here this is the last bullish candle that was printed. Then this is the first candle. You can see this is the second candle. Although this second candle did not close below this first candle, so these two I count them as one candle. Then you have this one is the second candle. But now remember, sometimes we do look at the sizes of the candles. You can see here these are very big candles. So I can give this one exception that this is a valid pullback. That is only if these candles are giving me a reason to think that this is a valid pullback. What the reason is that if you have a very big candles that are pushing to the downside, then here. So now for me, this is also a valid pullback. So I will go ahead and mark this one as a break of structure like that. This for me is a valid pullback. Now, after that, you can see here we had a minor break of structure. Why am I saying this is a minor break of structure? Because it does not qualify my rule, which says that I must see three consecutive candles that are pushing to the downside. You see, this is not a valid pullback because even this, after this candle that was, remember, this is the highest candle with this long wick that was printed before the pullback. So I will count this one as the first candle, of which this candle did not close below the low of this candle. So this is not, so this is the candle that closed below this candle. So this is the first candle. If even here we don't have even the second candle, so this is not a valid pullback. So I cannot mark this one as a break of structure. What about this? When we see about this one is a valid pullback because this is the last bullish candle that was printed, and you have this is the first candle. This is the first candle, the second, the third one. So this is a valid one. This is a valid one. But remember here we are in the bullish trend. But now here, look at here very clearly. Sometimes I can mark this one as a change of character. I can mark this one as a change of character. The reason being, if I look at the higher time frame, remember here we are in the for a 1 hour time frame. So if this market had tapped to higher time frame point of interest, maybe the higher time frame was bearish. Yeah? Maybe after the market up to that zone, then I see this candle closing below this one. And this one, me, maybe in the lower time frame, maybe like 30 minutes time frame, this will be a valid change of character. But for the sake of this video, we are still bullish until we see a candle closing below this low. I get it? Until you see the candle closing below this low. Because you have to agree with me that this is our all-time high, or this is our dealing range now. This is our dealing range. This is our protected high. This is our targeted high. This is our protected low. Until we see a candle closing below this low. But that is not what I was teaching in this video. That is not what I was teaching in this video. Let us assume that here we get our change of character. Let us assume this is our change of character like this. Let us assume that is our change of character. So what do we expect after the market breaks any kind of a structure? May it be a change of character, may it be a break of structure, we expect to see a correction before an impulse move. So this move to the upside, this is what we are calling a correction move. So this is our correction, this is our impulse move. So what we see here, you can see here, this is our first candle. We have the second candle and you have the third candle. So this is a valid pullback. So you can agree with me now. This is a valid break of structure. There are so many things that I do look at before identifying break of structure. But for the sake of this video, remember in this video, we are just looking at a valid pullback. Is this a valid pullback? This one. So what we see? We have this candle here that was printed. This very large candle. This is a bearish candle. We have a very long or very big bearish candle. So we get a valid pullback. You can see here, this is the first candle, even if not close above this one. So for me, this is not a valid pullback. I don't know whether you are getting it. This is not a valid pullback for me. Now, so that means what? I'll be working with this area here. I'll be working with this break of structure. So if I want to trade this kind of a move, even here in this time frame, there is nothing you can mark here. So what I do, I normally go to the lower time frame, that is maybe in the 30 minutes time frame, and this very long candle here, this big bearish candle, it will in the 30 minutes it will be two candles. So maybe in the 30 minutes time frame, this one will be a valid pullback for us. Now, where else do we see a valid pullback? You can see here, we have a break of structure. We have a break of structure there. After that break of structure, what we see? We have a valid pullback. This is the first candle, second, that. So this is a valid pullback for me. So let me mark this one as the break of structure. So I still do have another break of structure at that point. That is also a break of structure. Okay. So that is it. It is very easy to mark or to identify this pullback. So now let me go to the second rule that I use for me to identify a valid pullback. So the first rule I've said, and the main one that I look at, is two consecutive candles that are closing above each other. So the second rule that I use is that, so for instance, like at this area here, now here, Is it there? Yeah. Before this pullback, after this break of structure, you can see here we have a break of structure. That break of structure. So at this point, so before this bearish candle that is printed, did we see a liquidity sweep? You can see the wick of this candle swept liquidity below the previous candle wick. You see that? There is a sweep of liquidity before this push to the upside. So now that one qualifies for me that this is a valid, there is a uh, beginning of a pullback. So this pullback is valid for me. First, I see the sweep of liquidity, then, but that sweep of liquidity alone does not qualify this one to be a valid pullback. I must see three consecutive candles. So this is just an added reason for me to validate this pullback. I have to see sweep of liquidity, then the start of the pullback. So you get such a thing anywhere else? Yeah, for example, after this bullish candle that was printed here, I have to see the sweep of liquidity, then a bearish candle. So that one uh, is an added reason whereby we are going to validate this one as a valid pullback. But remember, we must see what? Three consecutive candles that are closing below each other. Okay, that is the second reason. The third reason is that did this pullback of ours sweep any liquidity, any either major liquidity or the minor liquidity. So for example, like this, when we had this pullback, did we sweep any liquidity? You can see this is our minor inducement or minor liquidity that was swept below this block. So there was liquidity below this block, like this. So the market swept liquidity before this impulse move. So now that one validates this one to be valid pullback. So you can see here the market swept this minor liquidity or minor inducement. So that one validates this one to be a valid pullback. So did we see another one? Yeah, let me check. This is the super. Yeah, this one. You can see here. Whenever we after this pullback, you can see this pullback swept liquidity above this area. There's our minor inducement. So I don't know whether you understand what do we call a minor inducement and the major inducement. So let me check a very clean example that I see both minor and major inducement. Let's see a good example. And go to forward time frame. Check the right next. Clean example for minor inducement. All right. Like in these parts, let me assume this is our breakout structure, like this. Let me assume that is our breakout structure. Okay. That is our breakout structure like that. So now we assume this part is not there. First of all, bit or whatever we have here. So now, looking at the forward time frame, you can see here, this low here, this is not a valid pullback forward time frame. This is not a valid pullback. So this now here comes the major inducement. This is the major inducement. Why is it the major inducement? It occurred after the break of structure. Are you getting? We get the major inducement after the break of structure. After the break of structure, this is the pullback that we saw or that we can see here on this time frame. So where do we get the minor inducement? This becomes the minor inducement. Minor occurs before the change of or the break of structure. And you see here, this is the pullback that we had before the break of structure. So this becomes the minor inducement. This is the major inducement. So, and when we know that the pullback has begun, whenever the market sweeps the major liquidity. So, if we see a major liquidity is swept, then that one gives us an indication that the pullback might have begun. I get it. So this is the good example of major liquidity, and this is the minor liquidity. So I think that is it for our video. I've said the first rule or the first thing that I have to see for you to identify that this is a valid pullback. I must see three consecutive candles that are placing below or above each other, depending on which trend we are in. The second one, before the start of that pullback, I have to see the sweep of liquidity, of which that is not a must. That is not a must. For example, like here, this pullback began at this area. This is where the pullback began. You see, this candle here swept liquidity above the previous candle. Then from there, the pullback began. This is the second one. The third one is what you have to see maybe a sweep of any liquidity, either major or minor inducement. So this is the major inducement and this is the minor inducement. Sometimes market can sweep the major inducement, then start to push to the upside. Sometimes market can come to the minor inducement, then now it trade to any pure high here, then from there it can start pushing from that area. So at that point now, I wish to stop at this point. Maybe in the next video, I'll try to explain something else or maybe try to elaborate further on how to identify valid pullback. So I wish to stop at that point. So before I go, if you are new to this channel, please consider to subscribe, leave a comment, which area do you want me to explain, which area do you want me to make a video explaining, and such like stuff. So thank you for watching. See you in the next video.